Recently, an acquaintance on Twitter, the AI investor, polled his followers asking, how big is Tesla in your portfolio? Where the majority responded that it was between 50 and 100% plus, 36% responding 100% plus. This is from several hundred folks. Holy smokes. I mean, how many folks are kidding here? Like saying, yeah, I'm levered all in. I just want to, get the animal spirits going. I want everyone to feel pumped up that I'm levered in, on Musk's baby Tesla. So I wonder, truly what is the upside potential? And in this video, we're going to talk about the upside potential as well as more conservatively baked scenarios, sort of say, where does Tesla go from here? What's sort of the downside? Where can it go? It's important. This is an unrivaled investing. It's important to keep this as a no hype mission-focused channel. So I'm going to say, hey, let's try to have a realistic range of possibilities here. And so if this is your first time tuning in, enjoy educational videos, please make a point of hitting that subscribe button. So let's talk about where do I think Tesla stock can go from here. Well, the AI investor, he called out his own model saying, hey, I think this stock goes nearly 5x in the next 5 years. And that doesn't even include some optionality like Robotaxi and Optimus. So when you have someone try to say, hey, here's what I'm penciling out. Here's my model, and this is how I'm getting to 5x upside over 5 years. And when you're talking about a company with real profits, that has a strong value proposition, that has real free cash flow, that's winning, taking market share, I think it is worthwhile to explore, okay, what is that model that gets you there? And is it reasonable? Is it conservative? Is that the type of journey that you want to go on? So let's understand the model. Let's understand, well, what's going on with Tesla in the first place? Well, looking at Tesla, I mean, look, their third quarter results were exceptional. You're talking about 55% growth in automotive revenues. You have industry-leading profitability, high teens profit margins. I mean, these are exceptional results, generating real free cash flow, several $billion in free cash flow in the quarter. I mean, this is exceptional what you're looking at here. And this is despite the fact that they are facing very real challenges that they called out in the quarter. Talk about higher raw material costs, commodity challenges, logistics, warranty, and shipping costs. They also had impact from the higher US dollar impacting their revenues to the tune of $250 million. So despite these challenges and the cost of ramping up production in their gigafactory Texas and Berlin, looking at these challenges, despite them, they still managed to post strong profitability and still managed to grow 56% total revenue. That is just exceptional despite those challenges. And that's what you want to see with the business. You want to see someone that says, hey, I'm going to take these challenges, I'm going to chew them up, and I'm going to spit them out. And they're just going to keep moving forward. That's what you want to see with an operator, an executor. And then this is also what you want to see. You want to see that they're taking market share. The auto industry is not growing 50% plus, folks. And so if you are growing 50%, that means you're rapidly taking market share. And this is a company that spends just a couple percent on sales, general, and admin expense. So they're not spending that much on sales and marketing, and they're still taking market share because people love the products. Currently, they're around 2% of the U.S. market. That's what we're, around 3% plus of the U.S. market, around 2% in Europe and China. So you're talking about a multi-year tailwind here if they're able to keep taking market share. That's the question of like, hey, this is a big market. Could this be, let's say, 10 to 20% over time if they really continue growing and really resonating with the general public? And if that's, wasn't exciting enough, their energy storage segment is also growing, over 60% in terms of deployments in the most recent quarter, which was a record quarter for deployment. So looking at this business that's also just running full throttle, they talk about demand for our storage products remain in excess of our ability to supply, and they're ramping up production. So this is another incredible growth story that you're looking at with Tesla. And so what does management expect longer term? Well, they're expecting not only exceptional growth, talking about over a multi-year horizon, expecting to achieve 50% average annual growth in vehicle deliveries. I mean, that is something special. No matter what happens to the average selling price, maybe it goes down, maybe it goes up. If you're able to deliver 50% annual vehicle deliveries, that's going to translate into exceptional growth in terms of revenue. And currently, automotive revenue is the vast majority of the revenue. But it gets even better if management's able to execute on it, where they say, hey, look, yeah, we have these hardware-related profits, but we expect them to be accompanied with an acceleration of software-related profits. And that's really code for saying, hey, we expect profits to grow even faster than potentially revenue. Because if you're talking about, let's say, software-driven revenue, something like, full self-driving FSD, or maybe it's, you tie it to some sort of insurance product or something like that. When you're looking at software-related revenue, those are much, much higher margins, or, robo-taxi or something like that. So if you're looking at something like that, if you're looking at much higher margins, then the growth rate in the profitability could be even faster than, let's say, the volume growth that they're looking at vehicles. Now, the question is, how much of a Musk discount should you get just because, he's obviously an eccentric billionaire? Is it possible he's sort of overreaching here for what the possibilities are? I mean, look, it's certainly very exciting to think about. And once again, you go back to the AI investor and he's saying, look, you factor in, average selling prices going up with, the semi and cyber trucks that'll come on over the next few years. You have full self-driving, you factor that in, you factor in their energy business growing, energy storage. And that's how he's getting to this, the 5X upside over the next 5 years. And I'll call out his model in just a bit. But the question is is that realistic? Should you, as an investor, should you say, hey, this is what I think is going to happen with Tesla stock? Well, first, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. In full disclosure, this is not financial advice. So look, here's the model from the AI investor that I called out on Twitter. So this is what he publicly posted. This is what AI investor publicly posted. And clearly there are several hyper growth drivers, and I'm not going to get into the nitty gritty of this model because there are different things you can agree or disagree on. Like the share count is a bit different than what I'm using, which is the fully diluted count. But there are clearly several vectors here, very positive directions that we're talking about here with, getting full self-driving, which will be very high margin long-term, this sort of software revenue. That could be just a huge driver. And insurance, if you have, let's say, insights into the insuring Tesla vehicles that other insurers won't have, and you can price things better, you should win over time. And of course, continued market share grab in electric vehicle market. So there's clearly a lot of growth drivers, that can get there. And he's all, the AI investor is also assuming a little bit of a higher PE multiple than I'm personally doing, around 34, 30 times. But the question is, okay, so what am I personally considering? And I'm a little bit more of a conservative investor, but I do have a range of investments that I consider in my diversified and growth portfolio. But the reality is, it's not like this is just pie in the sky, folks. I mean, look at the third quarter results, and once again, there are data points suggesting some of these growth trajectories might be possible. I mean, you look at services and other revenue, that is growing even faster than their automotive sales. Automotive sales grew 56%. Services and other grew 84%. It's smaller, but that includes non-warranty after-sale vehicle services, paid supercharging, so more people using it, more people paying for the supercharging, sale of used vehicles, retail merchandise, vehicle insurance revenue. So there are some data points suggesting, hey, that type of incredible growth going forward is possible. When you start seeing these line items, I would like to see additional detail, let's say, about FSD in the future, the full self-driving software, that people are paying for. I'm very curious if they'll start breaking that out, in the future. But when I think about my own personal hypothetical valuation framework, I think it's important to recognize first, Tesla stock can go way higher, way lower than any person's framework, because one is execution. Does the Tesla team execute? And two, what is sentiment looking like? And you can also have technical aspects, short-term things where it's like, hey, if you have several $1 billion of stock being sold, that can, compress, push down the stock price in a short term, where it might just rebound in the coming weeks or months as the fundamentals take over. So those are different data points to consider. This is my range as I'm considering it. One is I'm assuming profitability slightly higher than where they are now. They're currently around high teens. I'm assuming they get to 20 to 25% longer term. So I'm giving them some credit that they're able to get more and more higher margin software revenue. This could be lowballing it if that becomes a dramatic part of their business. But let's see, like that's where I'm at as an investor is I'm a wait and see, let's see the data points play out. They're currently growing around 57, 58% this year. So that's what I'm assuming they do for 2022. And then what's the growth rate over the next 5 years? So someone that wants to give Elon Musk full credit, they'd say, hey, let's assume around 50%. I'm more of a conservative investor. I'm going to say, hey, let's pencil out 25 to 35% annualized over the next 5 years. Either way, I mean, this is exceptional growth. This means they're still taking market share. And I'm also going to assume a much more conservative earnings multiple, because at the end of the day, this is a large purchase. And at this point, the majority of their revenue comes from effectively one-time purchase where someone's buying a car and they're saying, hey, I love it, and hopefully I'm going to be using it for the next 10 years. And so there is this sort of cyclical aspect to it. If you have a tougher economy, maybe you don't grow as quickly, and that is a data point to consider. So that is part of the reason why I'm assuming 15 to 25 times earnings multiple. We'll see. Maybe that's too low. We'll see. But it is interesting to point out, and maybe from a conservative perspective, that I'm effectively saying, hey, if you're growing at half the rate that Musk calls out and you have a 15 times earnings multiple, you're effectively flat over the next 5 years, assuming they're able to get to 20% profit margins. That's kind of interesting. That's pretty interesting. Now, on the flip side, I'm saying 35% growth, 25 times earnings multiple, 25% profit margin, so much higher profit margins than where they currently are, and still a discount to what Musk is talking about. And a discount to where it currently trades, because it currently trades effectively around 50 times earnings. So I'm saying, hey, the earnings multiple comes in half as well. Well, in that scenario, you're talking about 200% upside. So I think a situation like this, looking at Tesla, and when I look at Tesla, this is not like the SPACs that I've previously called out as complete dog poop, where I'm like, hey, this is ridiculous. Like I did a video on like herein, like a year ago or so, where I said it's more likely that I think I said it's more likely that I joined the Lakers than herein delivers their results. And like the stock got absolutely obliterated. And like at the time, everyone's like, Daniel, like you're ridiculous. This is not that sort of situation, because you have someone that has a real product that's delivering, that's taking market share. So the really question that you want to ask yourself as you're looking at Tesla, as you're considering your own investment journey, is you want to ask yourself, what type of investor are you? Now, over my shoulder, I have a copy of Margin of Safety. And that comes from the concept that Ben Graham taught about, which was this idea of like, hey, when you're looking at a stock, do you want to assume that they deliver on everything that they say that they're going to do? Or do you want to take a hefty discount to that? And so that's the approach that I personally want to follow. I personally want to follow to say, hey, let's assume this doesn't work out. Let's assume we don't deliver on that growth. And let's assume, the sentiment also gets weaker. And looking at Tesla, I'm saying to myself, I don't have like a smoking gun that says this is going to go down a lot. But there are enough sort of gray clouds in the sky that gives me pause, especially when I see investors that are very excited. The folks that say, hey, I'm 100% plus in Tesla. It gives me pause, because it makes me think these are the folks that are saying, hey, some trees will grow to heaven and no trees grow to heaven. That's the concern. And I don't know what is the thing that'll cause challenges for them. Maybe 20% plus of their revenue in China could create problems long term. Maybe it's increased competitive pressures. I don't know. We're not really seeing that at this point. This is sort of, you don't have exact data points that'll say, hey, this for sure will happen. But I think these are things that a conservative investor will consider, with their own portfolio. Like my top holding is an insurance company where they've compounded at, mid to high teens over a multi-decade perspective, but I'm assuming they only compound at, like 5 to 10% over the next 5 years, even though that's, well below what they've historically done over a multi-decade perspective, and it still trades at a discount. So you get some sort of valuation expansion there. Here with Tesla, I would want to be able to say, hey, I'm penciling out such a huge discount relative to what management's targeting. And maybe it's 25%, and maybe it's 15, maybe it's 20 times earnings multiple. And then I'm still getting huge upside, 100, 200% upside. So I look at this and I'm thinking, personally, maybe I would consider doing a teaser on this. But I just see so many gray clouds on the horizon. Like one recent data point is like the record jump in consumer credit card debt. And I look at that and like, that is not a sign of a strong consumer, in my opinion. That is a sign of someone reaching in desperation because they had unexpected bills and inflation was coming in too hot, which, by the way, you saw, credit card debt spike last time with, right before the great financial crisis. Now you might say, well, delinquencies are low and, clearly the economy is doing really well and inflation is still hot. So I just look at this and I'm saying, I, as more of a conservative investor, want to have that margin of safety baked in when I'm investing. I want to be able to say, hey, let's assume slower growth. And that I may not capture that dramatic upside. That's okay. There will always be someone making money faster than you. That's what Charlie Munger once said. That's okay. You need to find things that are appropriate for your investment journey. So I look at this and I'm saying, maybe I consider getting a teaser position, but at this point, I'm not quite at the point where I'm saying, hey, I'm going to go all in. Partly because, like, look, if this is a tough economic cycle, and even Elon Musk has said, hey, we might be heading for a recession, like the Federal Reserve is tightening too fast and too hard. If that happens, how can Tesla really keep growing at hyper speeds if we're in a recession? Like, I would be skeptical of that. But once again, that's a gray cloud. There's no certainty. But for now, everyone's like, hey, great company, clearly doing well. I would say the stock market, the price action is starting to suggest the fact that it trades, let's say, below its 200-day moving averages, and trending lower. I think that would suggest some of these gray clouds are starting to spook investors, saying, hey, this could actually happen in the quarters ahead. I'd love to hear your thoughts in the comments below. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.